Hello, I'm Jonathan Moyes, Head of Investment Research at Wealth Club, and today I'm joined by Javier Borich of Q Ventures to talk about the Q Ventures SEIS Fund. Hello Javier, welcome to the studio. Firstly, could you tell us about the SEIS Fund, what makes it different and why investors should consider it?
Sure. Hi, Jonathan. Thank you for having us here today. Excited to offer the Q Ventures SEIS Fund to Wealth Club investors. Q Ventures SEIS Fund is a pre-seed fund, and we're looking to back industry experts across the UK who are building the next generation of industry-defining software companies. Now, what that means is we're looking to back individuals who've worked in an industry, they've experienced a strong pain point or an acute pain point, and have gone out and built a software solution to address that, and to give those customers a product and efficiency gain of 5x plus. Now, we've deployed the strategy across 3 funds, and so far it's been successful. To date, we are a top 10% fund globally on PitchBook, and we are the best SEIS fund on MyCap, which is a third-party validation platform.
And so for those who aren't familiar, could you give us some background to Q Ventures and your role there?
Sure. So Q Ventures at its core is a private investor community. So over the last 12 years, the team have built a community of 1,200 investors. So high net worth individuals who have either built and exited their own businesses or have held senior exec positions at anywhere from a Tencent to kind of a leading marketing or financial services agency, family offices, and a number of early stage VCs. Now, these investors all joined Q Ventures originally to access early stage deal flow. So to be able to invest in alongside leading VCs into the likes of Monzo's, Plum Fintech, Oxford Medical Simulations, and Beer 52. Whilst we were building that business line up, we found that we were seeing a strong number of SEIS deals. I ended up investing into a handful myself, as did the partners. So a few years ago, we set up a Q Ventures SEIS fund to give our investors access to, well, firstly, to allow them to use the SEIS benefits, which are very generous, access to a diverse portfolio of tech investments, as well as the follow-on rounds, should they wish to kind of follow on.
And so what types of companies are you looking to invest in within the fund? Are there any particular sector that you're focused on?
Sure. So in a nutshell, we are sector agnostic. What we're looking to back, as I touched on earlier, are industry experts who have worked in a space, have understood the pain points, and have gone out to build a software solution to address that. Now, what that means is if you break it down into the founding team, so you have the domain expert, the industry expert, who understands the nuances of how an industry works and what will be the most high impact problem within that industry to solve. That could both deliver a step level of efficiency gains in productivity, as well as productivity gains for their customers. But then you combine that industry expertise with the technical skill set to get that product built and in front of customers. And I think what's often missed is we want these founders to have the hustle to get that product built and in front of customers sooner rather than later. So I think once we find a team that we want to back, it's all about setting up the right deals. So ensuring founders have 18 months runway, they've got the space to build and execute, but then also making sure that they have a focused business plan on getting products built and in front of customers. And to date, that's been really successful. So that simple strategy has led us to be the top SEIS fund on MyCap. But I guess more than that, 90% of our companies are revenue generating and 75% have graduated to follow-on rounds.
Are you typically backing these companies before they start generating revenue, or do they typically have some revenues when you invest?
Okay, sure. So the exciting part of the Q Ventures SEIS strategy is we are investing at MVP or pre-MVP. So imagine 2 founders who have got this great idea that can really redefine how an industry operates. They come to Q Ventures looking for SEIS funding to get that, to turn a concept into a product, and we fund them and we'll kind of support them using the Q Ventures community in order to do that.
And so how many of these companies can investors expect in their portfolio?
Sure. So we have a focused strategy. We're looking to back 10 to 15 companies per annum, and that allows us to really be helpful to those companies, use the Q Ventures community to support, and that's what's allowed us to have the leading returns to date.
And could you give us some examples of recent investments you've made in the fund?
Sure. So I think two examples that come to mind. We have Astronome AI. So it's an AI co-pilot which helps streamline and automate IT management. So imagine you're at the office and you're having networking IT issues, or you can't connect to the printer. Rather than having to call the IT manager, you pop a message into your Slack channel or your Microsoft Teams, and Astronome automates that fix for you. It saves you time and it saves your IT manager a huge amount of bandwidth. So we were able to we've been in touch with Chloe and James for the last 6 months now. We've really seen them work through that customer discovery process and had great references from both the Boulderton incubator as well as a number of potential customers. So we were really excited to be able to co-lead around with Techstars earlier this month. And since then, the company's executed well and they've already signed their first customer.
Oh, very good. Any other examples?
Sure. Another one that comes to mind is TurnEco. So it's a plug-and-play solution allowing retailers to provide circular retail services. So imagine a new parent who's buying new baby clothes every
That's
2
me.
to 3 months. Yeah. Congratulations. Every 2 to 3 months, you're buying baby clothes because kids are going to grow so quickly. What do you do with the old baby clothes? Do you put them onto Vinted and sell them for a fraction of the price? Do you put them on eBay? Or why not sell it back to the retailer that you bought them from, get credits to use on new clothing, and then the retailer can kind of sell those to other customers who might not be able to afford full price. The company's led by Kate and Zoe, who are retail veterans. So they launched the e-commerce offerings in Europe for Dr. Martens, Jimmy Choo, as well as led e-commerce at Arcadia. And they've now identified this kind of the circular retail or circular fashion as the next kind of generational shift in the retail industry.
So I guess two good examples there of industry experts that have gone on to start their own startup. How do you find these investments in the first place?
Sure. So at Q Ventures, we have an outbound strategy as with anyone else. So we have a team who are out engaging with the incubators, accelerators, university spin-out offices across the UK, but we're also engaging with other VCs who might find SEO deals that are too early for them, for us to get too involved, and angel investors. But the other part of our approach is it's an inbound approach. So we have the Q Ventures community. We're constantly engaging them. So we're positioning ourselves as the pre-seed fund or the SEIS fund in the UK. And whenever they come across a deal, so they might be co-investing with us, or it could be too early, they'll send it across. Now, in addition to that, we also have the 1,800 plus entrepreneurs that we've engaged with over the years, or the 110 plus portfolio companies. I think they're our best advocates. They know how we work, the value that we can add, so they're always quite active. And then I guess finally we have an open application process. So anybody across the UK can apply to get SEIS funding from Q Ventures, and we'll review that deal at our next team meeting on a weekly basis. And it's quite interesting, but kind of two examples of companies that have followed the cold approach are Presentient and Astronome, and we're both really excited to be backing them.
Yeah, very interesting. And so looking back at the portfolio, perhaps some of the more established holdings in the portfolio, are there any particular highlights there? Any examples of, I guess, early successes?
We've been really lucky to back exceptional founders over the years. And the first example that comes to mind is Semrush. So they're using AI to streamline the summary, review and analysis or comparison of legal documentation in capital markets. So rather than having to spend 3 or 4 days analyzing 300 or 400 pages of legal documents,
we need some of this, I think.
Why not hand it over to a machine which can do the same work in an hour? It frees up your time. It probably reduces your legal bills, but it also allows you to look at other transactions. So it's led by Peter Jasko and Sam Dorosky. Peter was ex-head of European CLOs at JP Morgan, and Sam he's a really accomplished CTO. So he's had a couple of exits and senior roles, and they came together to build this platform. And since we invested a few years ago, they've hit profitability, and they have some really strong marquee financial services names as customers. You could probably walk around Canary Wharf and you'll see a few logos around, but it's really exciting to be able to back them. Another company that comes to mind is Taxed. So Taxed is a digital tax assistant that helps individuals and SMEs file their self-assessments. So rather than having to go to an accountant, why not have an assistant that does that processing for you? So set up by two ex-tax advisors from PwC. We invested 2 years ago at sub-1 million valuation. Since then, Arjun and Eamon, the founders, have executed amazingly well. So they've crossed 15,000 paying users. They'll be at 1.25 million in revenues in the coming year. And I think at this point, after a follow-on round recently, they're a fund returner for SEI's investors.
Oh, very good. And by fund return, you mean it's valued at
Yes.
the total investment across the whole fund?
So that's right. So it's across the fund and it's a paper return at this stage.
And so to what extent do you get involved in these companies? You mentioned that you back industry experts that go on to do their own startups. Is it just a case of recognizing them and leaving them alone?
That's a great question. So we do have a focus strategy. We're looking to back 10 to 15 of these industry experts that really know what they're doing. But I think if you speak with any founder, building a startup is extremely tough and you can be quite resource starved. So we took the view of we're there to support the founders. They know what they're doing and we're not there to tell them how to execute, but we can provide them with kind of assistance from the Q Ventures Investment Committee if they do need introductions for hires, or we can introduce them to kind of tech partners such as Microsoft for startups who can give Azure credits or HubSpot. But then finally behind that, because we're engaging with these founders, it can be weekly, it can be monthly. We understand where the pain points are for them, and we're quite often leaning on the Q Ventures community to address those. An example might be a couple of years ago, Semaris were looking to hire a US head of sales. Robert at the Q Ventures team was able to access his network and help them find that head of sales for the US. And that being a really powerful hire for them. It's helped them kind of get to where they are now in their US customer base.
And finally, turning to the environment, it's been a pretty challenging time for exits recently. Have you had any exits in the portfolio? Any signs of exit activity on the horizon?
You're right. It's been a really tough market for late stage venture investors as well as early stage. That being said, we have had 8 exits to date at Q Ventures, and 2 of those have been recent within the last quarter. And those were all founders who were building a product that addressed the problem. So it's the thesis playing out. But I think behind that, our focus at the moment on backing industry experts who are addressing real problems for their target industry. I think that's going to create strong strategic value in the coming years. And as a result, I think Wealth Club and SEI's fund investors will get great returns off the back of that.
And so turning to risk, how risky is the SEI's fund? I guess if we speak about returns, we must also talk about risk. How risky would you describe the fund?
Yes, for sure. So investing in any startup is going to be high risk. So if you invest into a single startup, you should probably be prepared to lose all the money that you invest. But in the UK, with the Seed Enterprise Investment Scheme, what the government's done is build a great initiative to essentially limit your downside whilst magnifying the gains. So for an individual putting, say, £50,000 into a fund, so to having a broad, diverse portfolio, their capital at risk, assuming that they take advantage of all of the tax breaks available, is 13.5%. So that's great. And I think it's a really powerful tool to encourage investment into the UK ecosystem. But on top of that, we also take quite a measured approach to risk management at Q Ventures. So we want, as I mentioned, founders who know the industry that they're building for, and they can focus on getting a product built and deployed. So having a strong view of what needs to be built and in a capital efficient way. We want to back founders who are building for 18 months or raising for 18 months runway. So they can focus on building the product rather than having to go back to the market. And then we also use the Q Ventures community to help remove friction points as founders are deploying. So we have a focused approach to risk management, and we have been able to provide founders with additional capital from our community when it's been needed.
Thank you, Harvey. And finally, I'm joined by Robert Walsh, Chairman of Q Ventures. Robert, welcome to the studio. So you're an investor in the SEI's fund. So to sum up, why should our investors consider investing in Q Ventures?
Well, I think, first of all, it's great returns, right? It's the number one fund since we started it 5 years ago. Second of all, we're very diligent in looking at the deals. I sit on the investment committee. And third of all, it tracks the learnings. I've worked with Javier now for 8 or 9 years, investing alongside of him, and it tracks a lot of the successes we've seen, but more importantly, it avoids the disasters we've seen and not invested in. So we had one transaction that was called Go and Store. In 5 years, Andre and Amin took their company from 0 in revenue to 8 million in revenue and sold it for 100 million pounds. So that's what we're trying to emulate. Industry experts who quit their job, give something up, are smart, and grind it out. And that's really what, to me, is why we can do that. And with the 12 companies, it's diverse enough, but yet we can affect the positive outcomes. But it's great returns. That's why I've invested, and I'll invest in the next one again.
Robert Walsh of Q Ventures, thank you very much.
Thank you so much for having me.
If you're watching on YouTube, please press like and subscribe to the channel for more.